Hey there. Thank you so much for being with me. I want to make sure I introduce you properly. This is Aaron Bacus. He's with First Coast Mortgage. We've been working together for a long time. I'm loving, loving that I get to, smile at, I've got a bunch of people in my universe that we've all been doing this for about the same amount of time.
A
And it,
long time, and you look much younger than me, Leslie. So congratulations.
that's what it is, as I've let my gray grow out, but I love it. Yeah, and I mean, it's nice to see, the people with the longevity, and we get what's happening in our market because we've seen so many different markets.
Yes.
It doesn't feel, I was listening to a podcast about real estate the other day, and it's like, there's so many people that have only been in their business since 2000, since 2020, right? A lot
Right.
of people got their real estate licenses, so this shift into kind of a buyer's market. This is not a 2008 buyer's market by any stretch of the imagination, but the
Right.
shift into this more neutral market, it doesn't feel normal to them or natural, and they don't know what to do. Whereas you and I, we've been around, we know, we're like, actually, fan this is what I like to see. We're
Well,
in a good, I have options to show my buyers. I have a buyer pipeline, which is really nice.
yeah.
My buyer pipeline, I have options to show my buyers. Um, I didn't say that 3 years ago.
Well, absolutely, Leslie. I mean, I do feel like the word normal is a good one to use. And the younger folks in the industry that haven't seen normal, this is it. And normal is not bad. Like you said, lots of
Oh,
options to show clients because it wasn't too long ago when we were complaining, oh, there's nothing to show. I don't have anything for them. It doesn't meet. Well, now you have options.
oh yeah.
And the good news about where we're at is that rates have been trending down. So I'm really excited to talk about that. We've been talking about it all year. We had a little blip at the end of last year, and we've been talking about it all year, but it's happening. Rates are going down. So we're talking about instead of sevens, we're talking about sixes. And who knows where that goes? Maybe we start talking about the fives by the end of the year. And man, I got to tell you, those choices of houses that we talked about, Leslie, will be gone if we get into the low sixes and fives because everybody will start coming out of the woodwork.
You can feel it. It is palpable, and I don't want to overstate it, but certainly like this weekend and everybody that I've talked to, I was been busy this weekend. I know you've been busy this weekend. I was out showing, I was looking at new construction. Like doing it all, which was great, by the way. We're all really happy when we're really busy on a holiday weekend. And that's no joke. We really are because this is when we expect to be
Sure.
busy,
That's what we do.
when we hope to be busy, but it is palpable, this pent up buyer demand. And you can kind of see it. And like you and I were talking before, inventory levels, what I expect to see, because I track this data because I'm a spreadsheet girl,
I
is
tell you for
we're
sure.
seeing inventory tick up through the end of October. And that's kind of when we hit our maximum inventory level every year, right? Like right around October 31st. Um, but I expect to see inventory growing. I have not, since the end of June, see inventory growing. I'm seeing it tick down. Like
Interesting.
not, yeah,
It's
I
not the
it's fallen off a
counter.
cliff, but it is ticking down every single week when I collect this data. That's huge.
It's huge, and it's not something people are talking about. So it's kind of going back to what we talked about. These rates kind of trickle down, inventory trying to trickles down. You don't have the options that you would maybe now that you may not have in a month. You also mentioned builder, Leslie. That's a really, really good point because man, there's some amazing deals out there for new construction. I
Yeah.
mean, they're doing all kinds of things with your rates, options, bonus money, all that kind of stuff. But you got to believe when the action goes up, rates go down, those things will be off the table and prices
Right.
will be going back up again. So new construction is absolutely where it's at for sure. But man, these rates are just starting to go down, which is really exciting. And then we talked about too, for once, the press is actually doing us a favor. They're talking about how positive it is. These rates are going down. The market is screaming for the rates to go down. Everybody's yelling at the Fed chairman, what are you doing? Lower the rates. Whether that really lowers the rates or not, that's another discussion. But it's just, I feel like there's a lot of good mojo going on. So those folks that are on the fence, that are just kind of, ah, man, I don't know, like it's the time. And you can always refinance, Les. That's what I tell people. Like, you buy a house today, you could refinance in 3 months if you wanted to, if the rates and justified it makes sense. There's no restriction on refinance, which is kind of a weird talking point that all that people don't understand. Like a VA loan, yeah, there may be a 6 month restriction, but a conventional or FHA, like you can refinance as much as you want.
Yeah, you don't have prepayment penalties on those. And I mean, I don't know the last time I saw a prepayment penalty on a loan was probably back in 2006, 2007. Um, you're not seeing that these days.
No, you don't have it on those type of loans. Now, there are some different type of loans that have a little bit of prepayment penalties, but you're aware of it. But your traditional FHA, VA, conventional do
Yeah.
not have prepay loans. So
Right. I
you
mean, if we're
can
talking about your
refinance.
normal consumer loan, right? I mean,
Yes, for
there are
sure.
obviously exceptions to any rule.
Yeah,
But when you and I talk about these things, we're talking about a normal level consumer loan. We're not talking
right.
about, yeah, exactly. Um,
So that's a really good point. And it's still, I just don't think a lot of people understand that you can do that. You can refinance if you want to. I mean, honestly, refinancing is just a simple math formula on how much does it cost to refinance, how much time does it take you to recoup it, and how long you're going to be in the house. But now's the time to buy. The choices are there. But as you said, they're starting to slowly disappear. It's so interesting.
it is. I've been watching this trend for a couple of months, thinking, okay. But it's gonna, like just waiting to see because it's not what I expect to see. And by the way, let's also talk about what our inventory is mimicking. And to be honest, and like I said, we know I love a spreadsheet. The data that I personally I started collecting at the beginning of 2020, just as it happens. Interesting timing. But so it was
Yeah.
kind of, some of it's kind of fun data to watch, but like I am not comparing squat to 2020 through the middle of 2022. Like that, those are interesting to look at and go, huh, that's never going to happen again. And we dismiss it. So when I look at 2025, I'm going to look at 2018 and 2019.
Absolutely.
That's the market I want to compare it to. And it is
Yeah.
very comparative to 2018 and 2019.
Very good point. Yeah.
Yeah, it's got its own nuances. But if just by the stats, just by the numbers, those were not bad real estate years. And let's not,
Absolutely.
yeah, yes, we saw everything skyrocket after that, but as far as just real market, what we expect to see, those were solid years.
Well, it's so funny you bring that up because Brian Buffini, who's well-known education realtor all across the country, a lot of
Amazing.
people follow him. He said the exact same thing on his year-end forecast that came out a couple weeks ago on his podcast. Like compare it to 2019, and it's so true. Like
What
that was a good market, wasn't a bad market. It goes crazy in COVID. You don't compare that, but we're kind of back to what it was in 2019, which is super interesting. He makes the point, which is really good. It's like, think with the stats, not with your feelings. Like your feeling may be, well, it's sitting on the market 3 weeks. What's going on? But the stats show you that's not bad. So it's really interesting. I'm really glad you brought that point up.
Well, it's really funny because I did listen to that. I know exactly what you're talking about. And I in the car, I felt like watching my dad watch a Florida State football game. Like, like cheering it on. Like when I went over to my dad's house yesterday and he's there watching, was it Florida State playing? Me and sports
Florida
ball.
State had a big victory on
Yeah,
Saturday.
yes, yes,
Yes,
yes. And he was all excited. But I kind of felt that way as I'm driving in the car listening to Brian Buffini because I'm like, yeah, that's what I'm talking about. Thank you for saying that. Because I'm
yes,
so
yes,
tired of seeing people talk about, from 21 to, 22 or, inventory levels doubled.
yes.
Oh, as if that's a bad thing. I'm like, no, thank God they doubled. We needed them to quadruple, which is kind of where we're at now, like where
Right,
it should be. So
right.
it's not, I don't want to talk about, yeah, inventory is ticking down. I don't expect that we're going to get down to 3,000 properties. Like at one point in Northeast Florida in 2021,
Wow.
the beginning of 22, I think it was 2021, we had less than 2,000 active properties on the market.
That's unbelievable. Unbelievable.
It's ridiculous. We're hovering around 10, between 10 and 11,000 right now, and that's where we should be. That
Yeah.
that is a reasonable market for everyone to survive in.
Yeah, for sure. For sure. So, the overhang here again is rates. Now, the rates are starting to tick down. It isn't a huge movement, but it's psychological, going from sevens to sixes. And then you get to low sixes, and man, when a five peeps out there, and
Oh
there
yeah.
can be some fives out there, depending on what kind of loan you're getting, if you're buying it down. But, it's really exciting because it obviously affects affordability too. That $300,000 house may turn into a 350 house, and give you a few more options to look at. So super exciting to talk about that.
Yeah, and let's you know what? Let's do talk about the affordability of it because
Yeah.
at what point, like if you were looking at a 7% mortgage, just talking round numbers as I throw my pen, but if you're looking at a 7% mortgage and they go down to 6.5 or 6, what does that do? And let's use as I've got you doing math in your head right now. I'm sorry to throw this at you, but what are we looking at? What does that do for your payment? What does that do for your affordability?
Well, depending on what you're buying, what type of loan, and all of that, but it can make a pretty big difference in what your payment is, and hundreds of dollars a month, depending on what your price range is. And then it can affect two things. First of all, it can affect your mental point of view. Like if you're comfortable with a $3,000 payment and it's coming in at 2,800, man, you're good. You're comfortable.
Yeah.
And the second thing is, it, even though you can afford it, you may not be comfortable with it, or it may be the opposite. Maybe you're comfortable with it, but you can't get approved for it. So it's kind of two different things. It's the what I'm comfortable with, and then what you can get approved with, and those kind of conflict with each other. So making a movement in rates really helps both of those things, because we deal with clients all the time. Hey, I want our payment to be 2,000 a month. Well, on a $350,000 house, that may not be reasonable at all. But if rates slide down to 6.5 or go down to 6 or a 5.99, then it gets to be more of a comfortable situation. So I'm really glad you brought that up. It's just important to run the numbers.
Mhm.
We deal with clients all the time, Leslie, and fortunate to work with some of your clients. And we just run estimates like, hey, I love ABC Street. Let's run the estimate. Let's see what the taxes are. Let's give you some rate options. Are you comfortable with that? And then that gives them a real good feeling and confidence in going in and make that offer. There's no mystery. They know exactly where they stand.
Yeah. Well, one of the things I like about working with you, and I mean, I got a couple of people that I work with that I'm like, it's because I trust you and I know you've got the best interest of my customers at heart.
Yeah,
It's like, look, I'm going to give you the worst case scenario. And
yeah.
that is what this looks like is the worst case scenario and that everything better, everything we do from there just gets better. But yeah,
Well,
let's,
absolutely. We just like to give clients options. Like we usually give three options, three different rate options, because, the lower the rate is, generally the higher the cash to close, the higher your rate, generally the lower cash to close. So it just depends on what's comfortable there. But yeah, I think that's super exciting. Rates are headed down. I want to preach it. On the mountaintops is very exciting. And I know we talked about this before, Leslie, but I wanted to bring it up again. It's those down payment assistance programs. You
yes.
know, I don't even like using that word because it sounds like a negative word, like a handout, like whatever. Well, the reality, it's not. That those type of programs have become so much more the mainstream, where it's not just the folks that maybe don't have a down payment or have credit problems that are using them. There are people with good credit that just don't want to put a down payment.
What if you put new flooring in your house? You'd rather use it for,
Exactly.
you rather use it for that because those things cost real money too. Yeah, like take advantage of all the opportunities in front of you. I mean, especially when we're looking at as inventory is going down, it's like we're getting to where it is time to pull the trigger. And by the way, if you thought about last year, you were thinking about buying a house and interest rates were around 7, you were uncomfortable, it was a little to the price point. We're seeing that come around where a lot of those people are getting back into the market and they may not be as financially prepared as they'd like to be. Let this help you get you over the hump and get you into a better financial position for your entire financial picture.
100%. Homes for Heroes just came out. That's a great program that comes out once or twice a year and has limited amount of money for down payment assistance, helping you with that. And that money's already been starting to be deployed. It's a fantastic program. But there's plenty of other ones that are there all year round. Lots of lenders have come out with their own programs to help with down payment. So it man, I tell you, there's just so many ways to get somebody into a house these days. There's really not many obstacles that we can't overcome
Yeah,
when it comes to credit, down payment, employment. There's generally a solution there when two parties are working with each other to find that solution. So I'm really excited about that. That in combination with the rates coming down, you know, we've seen sellers over the past several months give concessions.
that's
That
what
may
I was
be
just gonna
going well
say.
too.
Yeah, and it's like yes, we are in a 2018, 2019, but sellers are nervous because this is taking longer than they have been used to for the last 5 years, and so they don't like it. And they also know what the interest rates are, so sellers are helping, it's what can I do to help you buy my house? And
For
that is
sure.
what they are saying and what they are doing and what they are offering up. So take advantage, and that's the other thing I learned a few weeks ago is you can stack that stuff. You can have hometown heroes or down payment assistance and also have the seller contribute and
100%.
stack that stuff and put yourself in an amazing position going forward. Like take advantage of all of it.
I mean, it's true
Mhm.
zero to get into a house when you stack all those together.
Yeah.
It's like zero. It's not just a talking point. You give a deposit to it in a contract, and a lot of times you can get it back. So that is a real thing. I also kind of something that isn't talked about a lot too. I mean, a lot of sellers want to sell fast. Like they want, hey, I've been waiting, whatever, I'm ready to go.
Mhm.
Well, closing a loan in 45 days is just so archaic anymore.
Oh, I
Like,
haven't written a 45-day unless there's a very specific reason. I
right,
haven't written a 45-day contract in a long time. It's 30.
sure.
Even then it's like, can we
That
pause?
go faster. Like
Yeah.
it is if lenders are able to work much faster. I mean, we could close a loan in 2 weeks. I know there's lots of lenders that could do that. So my point being, that may be a leverage point. Like, hey, I'll offer you X and I'll close in 2 weeks. The seller, like, oh man, I don't like the offer, but I'm looking forward to having my money in 2 weeks. Maybe I'll accept it. So that's just another little tidbit on strategy on getting your offer accepted.
Yeah.
So we talked about these rates going down, which is great.
Mhm.
We talked about now that we have options, but those options may not be there as rates continue to fall because there'll be more buyers that come into it. So I like to visualize it like this. Leslie, it's like, have you ever seen a track meet, like a decathlon or whatever, where there's hundreds of people
Biggest
like at the
preference would
starting
be.
point? You know what I mean? They're like stacked up and they're just waiting for the guy to shoot the gun in the air to get it started. I kind of look at that as our market right now. That
Yes,
there's
that's how it feels. Yes, it does.
sitting there waiting for that gun to go off. And that gun may be six and a half, six and a quarter, 5.99 on the rates. And we're already seeing those sixes. So the gun may be going off, and that influx of buyers come into the market, those choices go away and it becomes more competitive again. It's just something to remind buyers. And then we also talked about speed and down payment assistance to be able to put those together to make that deal work.
Yeah. And speaking of speed, let's talk about what it takes to make that happen because I think I've had a couple conversations with people recently where they don't understand there's lots that they don't understand, but they don't understand the pre-approval. They think if they call you and they say, "Hey, I want to pre-approve for this house at 350,000. But what if I want to bump it to four? Then I've got to go through the whole process again. That's not true. But like when you go through the pre-approval and we want them to do this ahead of time so they are really well positioned, if you can collect documents from them, if you can have them ready to go, that is how, like, we can't start on day one with them with a phone call and have it close in 2 weeks. They've got to call you first. They've got to like be in the queue and ready to find the house and pull the trigger on the house.
For sure.
Do
Well,
that in 2 weeks.
it starts with an application, pre-qual, running your credit and seeing what you put on the application, seeing if that works, send it out. And then it really comes down to providing your documentation so we can look at it and make sure there's no issues in underwriting. Doing all that before. I always like to stay start fast and finish slow. Let's start fast, let's get it going even before you have the house. And great news too about the pre-approval and pre-qualification, like we don't have to pull what they call as a hard pull on your credit. Everybody's always worried, well, I don't want to affect my credit. Well, I don't know that it really affects it anyway, but the great news is we pull what's called as a soft pull, which doesn't even impact your credit whatsoever. And that is a complete game changer. So that is something that we're doing as a standard now, and it's important to tell clients out there. And I think a lot of clients have been aware of that, but that is really important. There's no roadblock to get you to apply. Start that process. Let's lay out the blueprint for approval and a quick closing, so you're raring to go on day one when we have that contract signed.
Yeah, I love it. Well, that is fantastic. And I guess we've got a couple minutes left. Oh, you know what? We do have a couple minutes left. Explain something because you are just a quick, like you are a mortgage broker. What is the difference between a mortgage broker and a mortgage lender?
Yeah, it's a great question. So, a mortgage broker is this mortgage broker has several different lenders to use to find the best deal and the best underwriting and the best circumstance and criteria that fits yours. A mortgage lender has a mortgage, they only have one set of programs. So, I like to put it like this. Um, Bank of America, you go to Bank of America, you have Bank of America's programs. Okay. If you go to First Coast Mortgage Funding, who is a broker, you have 20 different Bank of Americas to choose from. So the mortgage broker, which is me, figures out which one is best for you, whether it's rate, terms, whatever that fits your situation. So that's the main difference, is that you have a lot of different options and we're essentially doing the shopping for you, which
Yeah,
is a great advantage.
absolutely. I don't think a lot of people understand that, especially since we kind of mortgage brokers disappeared out of the market for a good long time, and they're back now, and there's definitely a place like if there's a need for it, and I'm happy
Sure.
to be partnering with somebody like you who can fill that need. It's fantastic. But I don't think because of the missing from the market for so long, I think there's plenty of times that people don't really know what that is.
It's all about options. I mean, as consumers, we want options. We want to go to the store. We want to have three things to choose from. It's the same way with mortgages or insurance or whatever. Like, I don't want to be stuck in one channel. I want to have the option to go to multiple different things. And that's what a mortgage broker provides.
Well, awesome. All right. Well, thank you so much. I really appreciate your
It's
time.
always great.
I
Thanks
love
for
that every
having me.
to do this.
Yeah, absolutely. Thanks, Leslie.
Got it. Take care.